Welcome to the Retails.io podcast. We have our normal group of people here, Shlomo, Jessica, Rebecca, Ryan, as your co-host. We also have a special guest today, Rick Watson, who has an amazing podcast himself. I was lurking this morning through some of your podcasts, so don't be surprised if I throw a little knowledge your way of your own knowledge, Rick. I'm really looking forward to it. I like when I actually do preemptive studying up on our co-hosts. So we are discussing today the Barbarians at Macy's Gate, and it's not just Macy's. We are seeing this across the e-commerce and retail world right now. These entities are talking about splitting up the e-commerce side from the brick and mortar. And our big question, and Shlomo sends me text messages at all hours because the guy doesn't sleep, is this a good idea? Why are they doing this? And Rebecca's on these too. It's a whole group chain, and we're all wondering why Shlomo
Yeah,
isn't
no,
sleeping.
we
Well,
have a group. We have a group text message, and literally, I have about 40% of the messages going out, and everybody else internalizes it, and whatever they potentially see it. But yeah,
Potentially is the key
potentially.
word.
That is
potentially, yeah. I mean,
exactly
we'll find out
exactly
soon
right.
if they got the memo or not. I mean, yeah, but
Yeah. With that said, I'm going to let Rick do a formal introduction of himself, and then we'll jump into what's going on in this crazy retail e-commerce world, especially as we get into the holidays. And Rebecca, I have a special question for you, so don't let me forget to ask you
Ooh,
towards the end of
can't
our
wait.
podcast. Yeah, absolutely. Take the floor, Rick. It's all you.
Thanks so much. Hi, my name is Rick Watson. I'm the CEO and founder of e-commerce consulting firm based in New York City called RMW Commerce. I most commonly work with private equity brands that are looking to transform and grow their e-commerce businesses away, away or diversify away from, not away from wholesale, but add some new revenue streams to their portfolio. So, yeah, I have my own podcast as well called The Watson Weekly that's published obviously every week. And it's usually about 10 to 15 minutes of the top news items as well as investments and acquisitions that are happening in the space. But most importantly, not just that they're happening, but what does it mean? Particularly for anyone that's in the e-commerce ecosystem. That's the part that I enjoy most of all.
yes, and
Yeah.
as you guys know, as you guys, everybody knows, anyone who knows me because I've chewed your ear off probably. But I am focused on figuring out a way to blend the online to offline. That's something that's been my life's mission since 2017, probably. That's when my life started when it comes to this, obviously. And but on a serious note, I mean, so Rick's been very forward in the space from a technology perspective outward. I've come from a real estate perspective inward. Rebecca's from a retail perspective. Ryan's first from retail perspective, and Jessica's also from a real estate perspective. So with this group, we hope to sort of tackle this question of splitting e-commerce and online and what happens. Is it possible? Does it make sense? Is there a strategy? And then ultimately, is it executable? I think that's a key thing. And I think, Rick on his podcast, The Watson Weekly, if you don't follow it, it's a 10-minute podcast. It's amazing. Check it out. Has delved into some of this. And then in our internal conversations, there's been a lot of discussion around that. I know, Jessica, you listened to some of that, but I do want to start out and sort of put a theory out there. I guess the question is sort of, do they view these brands as being dead anyways, so might as well just take them apart for the pieces? Is that what's happening over here?
I don't think they're just trying to kill something that's already dead. In general, some of these brands are, iconic American brands with, with substantial store and real estate portfolios. So I believe investors don't do this by accident. But I think what, to me, the biggest motivation is investors are having trouble raising money for companies with large real estate portfolios. And it's a lot easier to raise money for e-commerce revenue. And so they're going where the money is, and they're trying to, it remains to be seen how much they will funnel that back to the rest of the operation, or is it just going to stay with the digital unit?
So, Rick, I want to circle back on, and I'm taking this out of your podcast. You had brought up something very interesting to me, which was this wink-wink relationship between the investors and the retail store entity. And you use this analogy of two children. one you give a life raft, and one you basically throw a rock to. Can you dive into that? Because I think that is the perfect groundwork for what we're talking about here in terms of what does this actually mean? What does this look like? And then we can dive into the issue. You brought up a root issue of the lack of defensible consumer value proposition. And then you also brought up that omnichannel can't even contend with each other in the same building. So how are you going to separate these two things and make them work cohesively? So a
Yeah.
couple of different things, but let's start with the child analogy of what's actually practically happening here.
Yeah, I think the the child analogy is that essentially, especially if you listen to Mark, what's his name, Mark Metrick, the CEO of Saks, and he is his primary thesis is I have to choose every day I wake up in the morning. I have to choose between two things: do I fund stores or do I fund digital? And basically, he's complaining that he never gets to fund digital because he has too much store infrastructure to worry about, whether it's debt. He can't funnel enough profit dollars to invest in the digital business. And so it seemed to me like he was wanting to do essentially the opposite, which is I want to put 80% of the dollars towards the digital business and I want to maintain the stores. And so I think, um, the big thing with the life raft is that you're trying to essentially save a growing digital business within some of these legacy brands that the store experience, let's say it's not necessarily up to par with Target, and where they are today with merchandising and their store experience with curbside delivery and all these things. They're just, maybe they have it, but it's just not as fantastic an experience. And so, how do they get out from under this problem? Well, Saks' answer is $500 million invested in the digital business. I read so many articles about this. You never read, like, is any of that going to go back to the store business at all? And what's going to happen there? I mean, imagine Target starting their transformation 7 years ago and say, you know what, stores aren't our future. Really, our digital business is in our future. If someone comes in the store, they're going to have an okay experience. That's kind of what we're saying here. Um, and I think that's kind of where the life raft analogy comes from. Is like if the store kind of sinks, uh, I'm not going to think about it too hard because I'm playing Scrooge McDuck with my new $500 million windfall from investors.
Yeah, I think that is, it's exactly at the end of the day, the consumer is the one who's going to feel these splits. And if they do end up coming to fruition, I mean, not that anybody's done it quite yet, but I think that what we're putting on the line is customer experience. And in a time in real estate, especially retail real estate, where we're trying to make retail experiential and we're trying to bring retail back by making it an experience, you're almost going against the very thing that is revitalizing retail by splitting off your e-commerce from your brick and mortar.
Look at Ryan's face. He's so ready to call bullshit on Mark Metric. He's like smirking. I see it. Come on, Ryan. Come on. Okay, you don't know Mark. He doesn't know you.
Hey,
Probably never be friends.
I'm
Go
just
for it.
trying to see through all the smoke and there's mirrors and I'm a little confused right now. But the
That was
logical part of me sort of says like since when did the customer vote and say I don't really like a harmonious experience? Never. So
Yeah.
how did we get to this place?
Yeah. I think it's taxes. That if you I should
well,
read back our text messages. They're so funny. I read back, I'm like, what are all of us like? Do we all just like take a gummy and like text message each other? Because sometimes it looks like we're high on our text messages when you read them back, in case you guys haven't. But this was one of the things we brought up is this completely just corporate greed at its finest, because this isn't going to make the customer experience any better. It's not going to change. If anything, that's making the customer experience worse, which actually devalues your brick and mortar locations and it devalues your real estate. So is this forward corporate greed that's going to end up biting them in the rear, because you're going to end up losing value in your stores, your sales go down. We know that e-commerce and brick and mortar work hand in hand together, and brick and mortar actually makes e-commerce better in terms of sales numbers. So is this being done from a straight tax perspective because there's a way to outweigh the gains on one to the losses on another? And so from my perspective, I'm sitting back scratching my head, and that's the only thing that came up to me that would be somewhat feasible. But maybe, I don't know, we're missing the mark, obviously. Maybe not. Maybe we're just calling the obvious that nobody else wants to talk about.
I definitely think the reporters don't seem to want to call him out. I mean, I've watched his CNBC interview recently. I've read some of the transcripts of what he's doing and kind of the logic of, oh, we're going to be able to do both. And then when he lists the investments, all the investments are in the digital side. And I think what's going to happen in the next year is, in the short term, it's going to look really good. And their digital revenue is going to grow. How can it not grow? Because they're probably, you know, their investment in digital will probably 5 to 10x in the next year. If I had to guess, I haven't looked at the exact numbers, but you can't help but grow if you're going to pour money on it. The challenge is, okay, now we have this digital entity. Is it going to be better than Target and Walmart and Amazon? And if so, how? And so when I get back to the kind of lack of a defensible value proposition, that's kind of the question I keep going back to. And it's kind of back to Ryan's point. It really is something that's just completely unsaid in any of these conversations. Is the conversation about the consumer? It's all about, okay, I have this big pile of money. How am I going to invest and not have to make choices between the two channels? Yet I just split up the channels. So on which so kind of going back. I mean, anyone who's been in retail for over the past 20 years, like, we've seen this movie before. Like, when e-commerce came on the scene, the whole idea, it's like, oh, we're going to have a multi-channel strategy, and you had one floor of the digital team, and you had the rest of the floors were the physical retail team. And now we're kind of going back to the bad old days and like pretending that nothing changed.
Well, Rick, I think this is so interesting because I work with predominantly direct to consumer brands who have been in e-commerce, and they're now clamoring to get into physical retail
Uh-huh.
because at some point it becomes unsustainable to grow your e-commerce through performance marketing and Facebook ads and all of that, right? So the fact that these legacy brands are going the opposite direction, I'm just like, what is happening right now?
Yeah.
So I don't know if you have any take on that, but it's like the two, like, they're definitely crisscrossing in terms of like strategy.
Yeah. So let's talk about what Mark has talked about with and Access Alex Partners, who's the consultant who was on Saks and now is on Macy's. I knew as soon as they hired Macy's hired them. It's like, you're not going to sign like probably a multi-million-dollar consulting project to then determine like if I'm going to do it. Like, no, that's not the question. The question is, how am I going to do it and convince people it's a good idea? That's really the mission of this consulting firm. Because otherwise they wouldn't have taken the job. The job wouldn't have been big enough. So I think you have kind of two types of clients. You have clients like you have, Rebecca, which are D2C brands that want to add retail footprint because of they need to introduce new products to customers. They want to give a better experience. A lot of these D2C brands, I mean, if you do Google Trends on any hot D2C brand, and then you compare them to like let's look at like apparel and lifestyle, and then compare their Google Trend to Lululemon. It's like a 20 times difference in search volume. So the reality is, no one knows, even if all the cool kids on the coast know who these direct consumer brands are. They need retail to introduce yourself to the rest of America. And then you have the nationwide retailers, which Kohl's might qualify. Macy's definitely qualifies. Saks is a little more niche because of their clientele. But I mean, really, the best analogy is, I keep going back to Target in the last 7 years, and they hit a point where, and what I've seen in any kind of omni-channel omnichannel adoption for like buy online, pick up in store, which is kind of like the first omnichannel technology that was widely adopted. Everyone gets to 25%. 25% of my customers are doing this, and that's 25% of my online volume. Hardly anyone goes the rest of the way there. Target is one of the few people that now 90+% of their orders are fulfilled from stores. And so they made stores their fulfillment hubs at the same time. And that is probably the hardest thing that any retailer can do ever, because it involves people, process, technology, real estate, fulfillment changes, all at the same time with good execution. And the number of retailers that have good execution is really, really small at that scale.
You know, one thing that jumps out at me, and guys, I'm going to turn this whole conversation on its head, and you could all disagree with me on it, but I actually think
Uh-oh,
what's
here
happening
we
over
go.
here. No, it's okay
Should
because
I go on mute?
no. I'm gonna advocate for this. Okay, and here's what's gonna say. I believe Macy's is a dead man walking as a brand. I believe Saks has been a botched up brand that's been in arbitrage play for the longest time, focused more maybe on real estate to a certain extent. I think these brands are not viable long term considering the management that they've had in place. Therefore, you only have a choice of looking at this as a financial guy. That's the only choice on the table. Because execution wise, they failed
By the way,
over and
you're not
over
going
and
to get
over
a
and over and
Christmas
over again.
gift from Jeff Gannett this year.
No, I won't get. I won't get. No question. And I think I ordered something on Macy's. It's gonna be the sale. The coupon code won't work. So here's the deal. I believe they say like this. Here's how we solve it. There's a bunch of morons out there that believe that e-commerce works without retail. We do not believe that. We will sell them our asset. We will retain the right. You will take a right of first refusal to buy it back. Let them pay it to us. Let them suck wind. Let them drive it in the ground, and then we buy it back. We just made the money buying and selling and trading our asset because our property, our IP, our brand is only now suitable for trading. It reminds me of a story they say about some guy I know that he bought a container load of shoes and he bought it and he sold it to another guy. He sold it to another club. Finally got the last guy. The last guy goes, I am going to sell this in my stores. Opens it up and all left shoes. He's like, go back. So he goes to the original guy. I'm like, what the heck? It's all left shoes. The guy goes, listen, these shoes are not meant for selling. They're meant for trading. And I think that's what's happening over here. Saks says, listen, how do we get enough money in our pockets? Screw them all. Yeah, we may lose some brand value in the meantime, but who cares? It's going down anyways. We're not operating properly. Make the money and then take it back and then gain the strength. The only problem is when you have a publicly traded company like Macy's, you're not going to be CEO when that happens. That's the only hole in my story as far as I'm concerned. Tell me I'm
Hey,
wrong.
hey Shlomo, I'm sorry. Hold on a second. I'm gonna make a tinfoil hat. I'll be right back. I'm just actually, you know what? I'm gonna
Yes.
jump on your. I'm gonna jump on your bandwagon, and I'm gonna jump on your bandwagon for this one
Ryan,
reason.
Occam's razor. Occam's razor. There's no other explanation, man. Okay,
No,
it's
no,
Occam's
but
razor.
here we go. I'm going to give you data. I'm going to give you facts because I think it's good for you. It's like your nutrition. And here we go. In the 2 to 3 years prior to the pandemic, when you looked at consumer bankruptcies, two-thirds, a very significant majority, were private equity backed. Now, when you look at the private equity investments that were happening in consumer space, like unequivocally, these are mature brands. You might sort of like the glass half empty person might say, they're brands that have one foot in the grave. And let's just go one step further. Let's look at Toys R Us as an example. I met and conversed with the partner that did that deal. I was like, oh, that's really interesting. How are you going to turn around? You know, like I started to figure out many years ago that this whole game of acquiring and levering up and cashing out dividends, it took Toys R Us to a point where I think it was something like 97% of their operating profit was sucked out by interest expense. So this is a question, and maybe I'm on the same bandwagon as you, and maybe Rick, you have better insight into this. Is this whole idea of a thesis? Is it really just pandering to the opportunity of investors coming in and trying to make a short-term kind of squeeze on this thing and then jump off the ship?
I wish I knew the answer, exactly to your question. I never try to sort of predict what's going to happen to stocks or what investors should do or not do. I just watch what does happen. And in these types of things, you just tend to follow the money. And, investing is um, it's kind of a follower's game. If you buy an asset um, that is valued by others, and chances are you're going to be able to um, use the Peter principle to pass it off to the next, the greater fool. In the end, because there's 20 people watching this deal, and you weren't the only one who found it interesting. So, to the extent that in 5 years maybe they can make that 500 million bet worth, $2.5 billion, if they can double the revenue, the interesting thing is that they're going to look like geniuses. I think they're going to make money. It's to me, it's not a question about making money. It's
So
more
this
about
isn't like when McDonald's bought the very young at the time Chipotle and ran it into the ground and had to sell it back out after they'd almost destroyed it. So you think there's actually money to be made here?
I think if they can grow that digital revenue and something doesn't happen where the economy collapses or something, and e-commerce valuations stay relatively similar to where they are, I think someone would be willing to buy it for them. If they can get growth above 30-40%, and they don't own the retail assets, to be honest, to sell it again, they're more attractive. And so maybe that's ultimately the play, is getting a structure of a company that's more attractive to resell. And maybe that's the answer. And having all this real estate that's only valued at 1x revenue, which is the retail revenue, is what markets tell you the retail revenue is worth, that it's not palatable, or it doesn't look good when you want to resell it.
Yeah, but
But don't
hold on. Execution side, you
An
said
entrepreneur doesn't think that way. An entrepreneur is saying, like, how can I take care of the customer? How do I grow this as a full business?
Right.
Because we need to leverage the whole
yeah,
thing. Investors don't think that way.
well, that was
it's
my
true.
point. They don't
That's
give a
true.
Yeah.
crap. They're like, let's get our
Yeah,
money.
let's get our money.
Well, but here's the thing, this whole finance thing, and Ryan, I'm on board with your tinfoil hat. It just makes my like retail heart so sad, because now we're
Right.
just looking at this thing from like this purely financial lens, and like, what if, just stay with me here, what if we just took a little bit of energy and effort and like retrain the employees and maybe raise their salaries a little bit, and maybe like taught them great customer service, and then like, oh my gosh, what would happen if this store actually became profitable again? And then not only
Yeah.
did it become profitable, but it pointed toward digital, which
Time
is
value of
why,
money,
by the
Rebecca.
way,
Time
Yeah.
value of money takes way too long. Sorry. Interest
Um,
rates.
but from like a long term, like really looking
Yeah.
into the future standpoint, I know you're joking, Shlomo, but like, I'm just like, stop being so short sighted.
It is. The markets are really short-sighted in this sense. I think that there is a lot of pessimists. It seems like there's a lot of pessimist investor activity in true brick and mortar retail. And I don't know if it's because everybody wants to ride the wings of, there's so many billion-dollar companies out there now that don't own real estate, that don't have any physical assets. I mean, it's the Ubers, it's like the ride shares, it's the DoorDash. There is no actual pieces to the company. And if that's kind of taking a legacy such as a Macy's or a Saks and creating it to be a company that actually doesn't have anything to it, and you don't have the downside of the assets and the real estate, maybe they think that's the play of the future. And maybe it is, where you're basically just a 3PL with a licensing agreement of a name. I mean, maybe that does make sense in some future. But I would have to say, with the trend in retail currently and consumer behavior right now, people have actually learned they want an in-store experience versus being purely e-commerce based and just having a package dropped at your door, whether it's by a drone, a driver, or whatever. And P.S., those guys, the Amazon guys, Amazon doesn't own any of their trucks. I only know this because they hit my damn parked car, and it took me 4 months to get through the various layers.
Jeff
the
Bezos goes on mute. He's like, I'm not answering that girl's phone.
Hold on,
Yeah, the
hold on.
DSP
Let me
network
take my
is
car out and move the
Bezos
street.
better send me I better get a Christmas present from that guy. It took me 3 months to get my car fixed because they hit my parked giant SUV. Yeah, it's all contract employees, even
Yeah, it's
the nicely branded.
franchises. It's
They
a
are.
franchise
It's all
business.
3PLs. That's pretty smart. I mean, but Amazon just now starting to buy their real estate, which they should have probably been doing a long time ago. But nonetheless, that seems to be the trend in Wall Street and from private equity is, hey, how do we create these companies that don't have any physical assets to them? There's just less risk involved, right?
So here's a theory for you. What if the CEO of Saks is not the villain here? What if he's just the victim? I mean, if you listen to his interview, it almost seems like he's a little bit defeated. He's like, I've been trying to do this for years and years where I'm trying to make a choice between retail and digital. And I have to pay down my debt and the interest and the service on all that real estate. And I need to transform the stores. And I can't find good employees. And by the way, there's this other big opportunity here that with leftover money, that's what do I invest in. And let's say he goes to the board year after year and saying, look, I want to transform this company. And unfortunately, what the board has, it sounds to me like I'm just like reading between the lines here. What the board is telling Mark is that, sorry, if you're investing in digital, this is worth this revenue. A dollar is not a dollar is not a dollar. $3 of this type of a dollar of this kind of revenue is worth $3. A dollar of this kind of revenue is worth $1. So as a result, if you push the money over here, then we can do it. If not, so the question is Mark the villain or the victim?
He's not the villain, but he's a willing victim. He took a job at Hudson's Bay Company. He's seen what's happened to every CEO before that. He knows they're an intersection of real estate and retail. He knows all about the arbitrage place. He's not a villain. And honestly, if I was in his position, I'd do the same thing, except I'd have my whole theory about buying it back, an arbitrage place. But I wouldn't be building a business. I'd be doing shareholder value. And in that case, that's great. So as long as you get people coming in, yes, yes, if no, no. You know what the real winner is? Authentic brands when they buy Saks Fifth Avenue off the shit heap. That's who the winner is. And Simon Properties actually make a crap load of money in this deal, like they didn't have Abercrombie and Fitch. If you're not sure, just read their filings.
Oh. Let me do a quick room reset on that. Thank you, Shlomo. That was a great segue to a little room reset. Welcome. This is the RE-Talesio podcast. We are on Zoom and we are simultaneously on this Clubhouse room. We've got our normal panelists here, which includes Rebecca, Ryan, Shlomo, myself, Jessica Mauser, and we have our wonderful co-host Rick today, and we are discussing the emerging trend of our larger retail entities potentially splitting their e-commerce off from their brick and mortar, and what the effect is on commercial real estate, what the effect is industry-wide, and why are they doing this? So I think we've kind of covered the why. And for those who are in the Clubhouse room, make sure you're following everybody up on stage. Click a follow for those that are sitting around you as well. But a kind of follow-up question. We now know the ins and outs of what's going. We've set the stage on, is this a good idea? But let's move on to the next issue here. How does this affect commercial real estate? So let's say we have two scenarios. Best case, we see revenues increase for Macy's and Saks. Does this translate into stronger store sales as well, and then eventually give to a better customer experience? Or does this take away from the customer experience by then potentially losing real estate footprint, physical brick and mortar footprint, and then we see a wave of big box stores come back and the further decline in the traditional mall setting where many of these brands exist currently? Who wants to jump in?
Ryan, you want to
Ryan?
try? Oh, sorry. Did we just all say Ryan?
We all said Ryan. We're all looking at Ryan's like, you guys, stop it.
Ryan's dodging.
People, you guys are ganging up on me. I'm looking at this genius in the top right named Rick, and I'm like, I think he's got a good perspective on this. But here's my short answer. I'll not back in myself out of this one. But in the short term, if they're funneling a lot of capital investment into their digital channel, it's quite conceivable that they're going to see a good up and to the right trajectory. And if you just look at the behavioral economics that exist between channels, so either pre-shopping online, buying in store, vice versa, to the customer, they're going to see Macy's. They're going to see Macy's online on their phone and in the store. And in the short term, they might be a short term sort of benefactors of that. However, long term, all of the complications and the expectations of what consumers expect are going to be really challenging. I think they're going to be genuine and severe headwinds. It's no different than, gosh, many years ago when I would shop at GNC, and they would always hit you up with their big loyalty program. It's like, oh, if you pay $13 for the loyalty program, you can save 30%, which is $25. So I want to just take $8 off your bill. And you're like, that's fantastic. I love GNC. And then you go to the GNC 5 miles down the road and it doesn't work. Like, I don't shop at GNC. And eventually it just went to Amazon, right? Because it was just kind of a pain. I don't really like it. So I think short term, yes. Long term, I don't think so.
Yeah, I'm really wondering, like, how is merchandising planning done in this environment? You're a shopper, everyone researches online, and then you walk into a store. What are you going to get? Are you going to get the same prices? Are you going to get different prices? Are you going to get the same brands? Are you going to get different brands? Who's doing that?
Well, right. Like, and
Someone
then
who's
there's returns. Like, can I buy online and return in store? Do your systems talk to each other? I mean, yeah.
so Rick, you said something. I don't know if you said it on the podcast or internally. There were 148 agreements, you said, between the parties.
300. This was Mark's number.
This
300 service
300.
agreements. Yeah, imagine you had a Google Doc with like 300 Google Docs, and each of them were like a set of, each document contained, let's even be like generous, like 20 KPIs in each of them, as long with an owner next to each KPI, that this is how you're going to maintain this omni-channel customer experience. That's what they're paying. I mean, consultants, you don't trust any consultants. That's really the lesson here. Is that you're paying for these 300 agreements. That's really what they're paying for. Is they're paying for these operating agreements, for how they say they're going to do it, and then the employees are kind of left holding the bag. Like, okay, if I'm going to return, I'm going to do this. And look, I'm assuming that the systems are going to talk together, because no one's going to unintegrate them. No one does that in IT. It's not a thing. So the systems, I'm pretty sure, are going to talk to each other. I think the problem will be what happens when the digital team wants a new thing, and it also then needs to talk to the store. That's when they're going to be in trouble.
Do you guys remember when Best Buy wouldn't honor their online prices? This is like early 2000s. Do you guys remember that?
Oh, no.
Like, are we
That's
going back there? Like,
It wasn't just Best Buy. I worked for Apple in 2009, and
Wow.
you could not buy a computer online and return it or exchange it in store.
that is, I mean,
It was
honestly, this is what
crazy.
it sounds like from a customer experience standpoint when you start doing what we're talking about, what's being talked about being done. That's what it's going to turn into. Like, yeah, they'll talk to each other, but at what point are they completely harmoniously talking to each other? And are we?
Okay, guys, let's be real. Here's how it's going to play out, okay? Here's how it's going to play out. There's 62-year-old Gloria who's been with Saks for 42 years. She has a pin on here, like showing how long she's been there. Multiple different pins and flourishes, right, with the tags. She's behind the counter with a keyboard, right? And she's like, hold on. I think this, 1 second. Let me make a call. Oh, this is crazy, these people.
You know what? But
Half the
Gloria is the
customer.
best private shopper you've ever had, and she knows that store top to bottom.
Oh,
Yeah,
I was gonna
except,
say she's
except
your $1 million seller.
She
Yeah,
is.
yeah, exactly. But listen to this, okay? The person that's at the desk, they feel bad. They won't walk away. But all the 7 people behind you waiting online to pay, they're like, oh, we'll just go online. They go online. They're like, hold on. The prices are more expensive here. And it's just going to be a total shit show. So honestly, there is no way that a company like Saks that screwed up every other initiative they've had in the past 10 years is going to execute this perfectly, which means ultimately that the brand is going to get diluted. Ultimately, someone will buy it off the crap heap. And honestly, Macy's may follow and do the same thing, although I've spoken to people who think it's not going to happen and whatever. And then you have, obviously, now Neiman Marcus is pushing back on it, but you have Kohl's. Kohl's is a company that, heck, they were never in favor of a lot of things that they're in favor of now. They're like a political candidate. They were against it before they were before against it. Who knows what's going to happen? But here's one thing I will tell you: the opportunity for digital natives to go into stores with integrated systems today and capture market share is being served up on a platter. And you know what? All the VCs are following the track of we'll invest in e-commerce, not in retail. So they're basically chasing the avenue that's clogged and not the opportunity. And all the five of us sitting over here, we're the rest of the people. We're not the main thought process. And that's what's happening in retail. And quite frankly, I can't explain it.
I was going to add. So like, let's believe in miracles for a second. That these 300 operating
It's a
agreements,
Christmas miracle. We
it's a
should believe in
Christmas
Christmas
miracle.
miracles.
And I
So
just had my mother stay with me for 3.5 weeks, and like she's so sweet, but she's addicted to the Hallmark channel, and it literally half of my brain cells have like gone to sleep. but but let's believe in miracles for a second. There's like I literally am like we're gonna write a program. I'm like inject the puppy into the equation, someone who just moved back home to the small town, whatever. Okay, set all this aside. So let's just say that their 300 operating agreements like run seamlessly, right? The issue where I see a lot of smoke and combustion down the future when you decouple consumer businesses by channel is simply this: they have different motivations. They're different businesses. So let's just say that my fall business was really good and I don't want to go on sale as early and I want to squeeze a lot of average unit retail and price and ultimately profit out of the quarter and look like a shining star. But let's say my counterpart business is like, yeah, no. Who does that? And let's say it's even written in the operating agreement. All of a sudden, like one success or benefit that optimizes their business comes at the consequence of the other. And who loses out of all that? Well, I think there's a lot of losers, but ultimately it's going to come back to the consumer experience is going to be compromised because you have two things that are actually fighting in different directions, trying to solve for the same thing. Because again, we know customers, they just don't care. I want to buy it wherever, however, as easy as I can.
Yeah, somewhere Jeff Bezos is counting his money because he's literally. I mean, if you wanted to know if Amazon's going to get a high end clothing line, well, they may end up selling through Amazon through Saks and have there's something that way. I don't know. It makes absolutely zero sense. I want to hand it back to you, Jessica. But before we do that, anyone's in the audience on Zoom, you could send a message to the chat. Anyone who's in the audience on Clubhouse would like to come up and ask a question, we'd love to have you up. We usually don't get a lot of questions, but we'd like to change that. So you be the first, jump into the deep end. So with that, yeah,
I've got a question for Rebecca before we get too far off. I wrote it down so I didn't forget to
Okay,
ask you.
let's go.
Okay, so talking about Christmas miracles here. So how do you see retail sales numbers for this season? Direct to consumer brands, our digitally native brands, do you think that they're going to see an increase in sales and strong sales, especially given in some bigger markets, San Francisco being one of them, where I am, where we are seeing smash and grabs and things of that, where people probably aren't out at the typical stores they would have otherwise shopped at this year? What's your glass ball? What's it looking like over there?
My crystal ball that tells me nothing. No,
get a new
my
one.
right, yeah, get a new one. It's broken.
We need the one that Shlomo has. Shlomo, can you order up a
Yeah,
few of those? I don't need any
come
left
on.
shoes, but I do need whatever crystal ball
I
you
lent
have.
it. I lent it to Rick.
Wow.
No, you know what, Jessica? It's a good question, and let's talk about physical because that is the kind of area that I play in, right? So physical retail. We have not yet seen the Northeast or the heavily populated West Coast return to pre-pandemic traffic. Like we have not. It's just not happening. Everything that I'm seeing over here from my clients and the brands that I follow in New York, unfortunately, it's not happening in the physical. There's some traffic there. There's like a very, loyal customer base for some of these brands. But, where we're really seeing uptick is in markets like Dallas, Charlotte, southern,
Southern.
let's call it less,
New Orleans.
yeah, New Orleans,
So do
less
you think it's following
recognition.
the shift in the population shift?
I think it's following the population shift, and I also think it has to do with regulations and wherever local municipalities have put into place heavier regulations. I'm sure there's some political stuff here too that I'm like, again, not an expert in, but I'm sure you can kind of follow, follow
Yeah.
all of these things and, read the tea leaves and make some discernments about which states are red and which states are blue, where people are shopping versus where they're not. But I think in those areas where we are seeing a lower retail traffic, I think we're still going to see strong e-commerce. At least everything that I'm seeing indicates strong e-commerce numbers for direct to consumer brands that are offering value to their customers. So whether that's through like a bundle or something like that, we're still very promotional. So,
So are
I
you
think
saying you're not
there's
seeing on the DTC side pickup, or generally when you go to, I don't know, to Banana Republic in Manhattan, you don't see the pickup?
I would say all I don't think any traffic has returned, with very few exceptions, right, to pre-pandemic levels in the Northeast in particular, which is where I do most of my work. But I think because direct-to-consumer brands have less brand recognition and less reach than these larger, let's call it like older brands, like say like a Patagonia, right? Like I think, you know, we're seeing, at least what I'm seeing is they're not seeing the numbers that they were hoping to see in physical retail.
Interesting. So, Rick, does that translate to their delivery as well? Meaning, are they therefore suffering from the lower margin e-commerce, or do you think their stores are serving a different role to complement that additional online sales as opposed to in-store commerce?
Uh, you know, I mean, what Rebecca is talking about, I think right now it's just following the pandemic. And the South was hit more uh, in the summer, and now it's subsiding in the South. Um, Louisiana right now is probably one of the lowest states in the pandemic right now, and so is Texas, and Delta has moved kind of to the northeast and the north, through to Michigan and other places. So I think that's really, I don't think it says anything about the strength of the retail per se. I think just consumer sentiment. People
Right. It's a
people in any
consumer
state,
behavior
red state
issue.
or blue state, they get scared.
Yeah.
Get scared when their state is, you know, critical.
Yeah.
Yeah.
Not some red states, okay? Some red states we don't get anything, but the blue states certainly we get really concerned when things happen. Yeah.
Okay, so my final question here, and this is I'm going to go through the panel, and you can tell me if you believe that we are going to see more vacancy in the long term or less vacancy in the long term. And the question is this: if we do see brick and mortar separated from the e-commerce at some of these big companies, Saks, Macy's in particular, does it lead to long-term vacancy in big box retail? Shlomo?
Yes, because the companies will die. They'll flounder. They'll shut stores to save money, and ultimately they'll just croak.
Interesting. Ryan?
I usually try and have some sort of thought-provoking thing, but I'm going to just jump with Shlomo's bandwagon on this one. I've been bandwagoning with him all day, haven't I?
You
I got to stop
have.
this.
This
I
is
can tell you.
very
Come on,
unusual.
the water's warm.
Yeah, I can assure you, and Shlomo will tell. He probably sees a therapist by how many times I disagree with him. So let's just enjoy the moment. And he's laughing because he's like, "Damn, he's finally telling the truth."
Oh, it's so
Yeah.
funny. Rebecca?
Okay. I mean, I'm so sorry. I have to agree with Shlomo.
Wow, hold on, pause. Just go
Wow!
ahead.
Oh my, you know what? Shlomo, I know Christmas isn't your thing, but this is a Christmas miracle. Do we have Hanukkah miracles? Are those things too? This is,
Hanukkah's
But
over. Those miracles of 8 days
those are,
burning light.
those
Miracles
are
in
gone.
oil. Yeah.
All right.
but wait, Jessica, let me just like asterisk that because
Oh,
I think what will happen is they're all going to just turn into distribution centers.
oh,
Oh,
come on.
Not really, not really.
wow.
But,
Interesting.
No,
Okay.
but honestly, that does go back to Jessica, something that you spoke about with I forget, I think it was Najla, that you believe the distribution center is now a store that's an
Yeah.
experience. So it does distribute, but it's not
Yep.
necessarily racking. I
Yeah.
get that. I mean, Target's essentially well, they're saying 95% orders from the store. So there's somewhat of a distribution center that's an experience. But okay.
Yep. Okay, Rick, come
Yeah,
on.
I think look, I think the whole world is now going to be a GoPuff distribution dark store. You know, they just got about 1.5 billion investment, and they're going to need to spend that somewhere. So I think there are a lot of brands that used to have stores in kind of these non-open air malls that are closing down and opening up shop in Target. That seems to be the trend, and the open, the kind of the strip malls and the open air malls, whatever you want to call them, they do seem to be still doing fine and growing,
Yeah.
as consumers seem to like that format. So I think, I have a statement that, like, bad, you always get this question, it's like, is retail dying? Like, has been like kind of the question for the past 3 or 4 years. Like, I was like, bad retail is always dying.
Yeah, bad retail's been dead for a long time. We
Yeah.
all,
Retail's
yeah.
being murdered. Retail is being murdered. End of story.
Yeah, absolutely.
So hold on, Jessica, what do you think? You just asking questions today? You don't have an opinion?
What? No, I'll have it. I have plenty of opinions. I'm not sure anybody wants to hear them, but
Oh,
yeah,
no. We want to hear.
We need to hear.
we need to hear. I think that on the long term, it's going to add a lot more vacancy to the market. I think that we're going to see these. I think this is the first step at dismantling brick and mortar for the retail that was dead and dying, which is your Saks and your Macy's and your Kohl's. These are traditionally brands that haven't been doing well pre-pandemic or not. So I think by separating off the e-commerce, all you're doing is creating a profitable point that you can spin off or sell to somebody else while you dismantle and devalue the brick and mortar side of the business. And what they'll end up doing is probably propagating these into portfolios of real estate assets and selling them to Prologis and the big players out there who will eventually spin these into just straight warehouses because they're so hot and horny for real estate in urban markets, which is where these particular boxes tend to lie. And it hits this nerve for last mile distribution that you can't get into. That's my prediction.
So, in essence, what we're saying is that now that GoPuff has 1.5 billion, they really are going to be looking at the metaverse for potential distribution and on-demand half-hour
Don't get me
delivery.
started on
And,
metaverse.
Wow.
and they'll feed you NFTs that you can. Got it. Okay.
Yeah. Oh, don't get me started on metaverse. I twittered this the other day. Is that what you call it? A Twitter?
No,
right?
I have
It's
a deal. I'm flipping in the metaverse. I bought it for $100,000, and if you want to buy it, $1.5 million. Quick closing.
Stop it already. No,
To you real
now
estate people, my life's work and mission from this day forward is to inject technology and innovation in the future into the minds of everyone in commercial real estate.
Yes, you're right. Let's give up on the real world and let's focus on buying real estate in the metaverse. Holy
Yeah.
crap.
Yeah. You know what? My comment to somebody was I know enough people who already live in an alternative universe. I don't know that we needed to create the metaverse unless that's just where they're going to go live, right? Like everybody who has, their alternative reality, you just go to the metaverse and everybody will be fine. So
Listen, not to go off topic, but the big sin in the metaverse is calling it a metaverse and calling it real estate, right? As long as if you get that out of your mind, then it's not that crazy of an idea. But the fact that you think it's a metaverse and is real estate and people live there, you have luxury homes, yeah, crazy.
Yeah, I just can't get all I think is the Lego movie when I start thinking of the metaverse. I don't know. It just
My daughter has like 3 Roblox houses, you guys. So
Yeah.
Yes.
Yeah. Oh, can I
Yeah.
stay over? Can I stay over for my wife takes me
she
out of
would
my
love
other metaverse house?
Oh my
she would
God.
love to have you, but one of them has like 50 cats in it, so you're gonna have to like deal with that.
Well, on that note, before we go too far off into the metaverse, maybe that should be our next topic of discussion. Feel free to weigh in, audience, if you would like to discuss commercial real estate in the metaverse from one of these podcasts, because that could really go sideways. We are coming up here on what we've been talking for 50 minutes now. I haven't seen anybody raise a hand. I don't see any chats or questions. So I just want to thank everybody for showing up to our live podcast. We obviously will be, this has all been recorded, so it will get snipped down and all of our randomness will probably get cut out. We'll keep the good
No,
parts
no,
where
no,
we
no, no, no.
sound intelligent.
We're cutting out the relevant stuff.
Oh,
It's all going to be
oh,
the randomness.
oh, it's going to be the random. Perfect. That's what everybody really wants to see. You'll be able to find this reposted on YouTube. You can find it on our retails.io website. And it'll be in audio form, and it's actually a transcription as well, because if you don't want to hear our annoying voices, you can just read it for those who prefer that method of madness. So we will deliver you all your retails.io podcast fun in all forms possible. So Rick, thank you so much for your input today. You were awesome. We appreciate you. I'm sure we'll have you back again soon. Thank you everybody who stayed and to listen to us today, and we look forward to seeing you guys next month.